Let's talk about getting pre-approved for loans as a real estate investor. What's up, y'all? I'm Ben Day with Lionshare Bookkeeping, Landlord CFO, where we help real estate investors exclusively figure out their accounting and finance so that they can scale their business. And this week, we want to begin to really tackle some of the biggest issues and some of the biggest questions we see from investors who just don't understand the money side. We got started in the business by helping folks that were in the, fortune builders, We Buy Ugly Houses, or just on Bigger Pockets watching videos that knew how to work with people, get deals done, had some construction experience, but predominantly don't have an accounting and finance background and we're having trouble with their lenders. And today's no different. And one of the most common things that we hear from these folks is, what does this approval process look like? How do we become best friends with our banker? How do we get the money we need so we can just continue to do deals forever and ever? And a big portion of this involves how your pre-approval works as an investor. So I want to outline this a little bit for us today in this video so that you can move with some confidence, make sure your financial statements are done correctly, and make sure that when you show up to the bank, all of the logical, all the details are ready to go in a binder. You can hand it to your lender and build the relationship instead of worrying about the numbers in the spreadsheets the whole time. So when we begin to talk about pre-approvals for real estate, the first thing we need to really begin to do is understand that the best money that you can ever get is going to evaluate everything that you have going on. If you're really strong in a few areas of your life, like if you have multiple businesses and a bunch of your businesses are really strong, and then you have a startup business, like that startup business, the bank is going to know that you're good for it because you're cash flowing in all these other areas. However, if you're trying to get a loan in a business that looks like it's really strong, but you're bleeding out in your personal finance and in other businesses and other places, the bank may think twice because right now, they know you as an entrepreneur, as a business owner, you're floating the bills and the cash flow for multiple things at multiple times. So your pre-approval process could be super simple, or it could be much more complicated and nuanced. And if you're a real estate investor, there's a very good chance that not only do you have some sort of W-2, you might be keeping it, but you may have quit it. You may be wholesaling or flipping full time. And then you have a rental property business. And then you probably have other businesses on top of that, like multiple LLCs for rentals or what have you. So we're going to assume that you are a normal person with some complication and walk through what your pre-approval could potentially look like so that you can be prepared. First up, whenever you're getting pre-approved for these loans, you're going to get pre-approved like anybody else. In very simple terms, if you have a W-2, if you have some sort of normal paycheck that doesn't come straight from you, like you've got a job with somebody else and you do real estate, that W-2 and your tax return and your credit score and your ability to make a down payment and how good of a person you are, all of that's going to come into effect in your pre-approval process. This is kind of normal pre-approval stuff where they want to see that you're making money consistently, that you pay your debts, that you file your taxes, that you're an upstanding citizen, things of that nature, so that they just generally feel good. They know that you've got guaranteed income and they can begin to analyze your ability to get a loan based on your DTI. That's your debt to income. Now, this is normal lending, but this is not actually what we want to begin to do. You're going to want to jump through these hoops, but if you're a real estate investor, if you're a business owner, you're going to want to show up with more information because that DTI analysis is going to miss big pieces of your puzzle. And we can begin to really supplement that and get better loans by moving away from that and adding in some other financial ratios. But first things first, we need to make sure that your personal house is in order. Because you're going to be running this business, you're going to be running these loans. We need to make sure that you are strong in these areas. And if you're not 100% strong in these areas, that you're getting stronger every day. So really start paying attention to your personal finance and start kind of getting your house in order. Don't assume that real estate's going to save everything and you can just keep living your lifestyle and go and buy a whole bunch of rental property because that's just not going to work like that. Real estate isn't going to solve a problem for you. You're going to have to do that work yourself. Fundamentally. But when it comes to pre-approvals, we've got to start here in the personal. So make sure that that is at least growing and progressing a little bit every day. Number 2 on your list of things that we're going to need to begin to really put together is a personal financial statement and business financial statement. So in this section, here's what we need to begin to really outline is that in addition to just a tax return and just a W-2, there are other things that go on in your personal life. Maybe you have a life insurance policy. Maybe you're playing the stock market. Maybe you like own a whole bunch of cars. You already own a home. Anything that you have going on in your life of value may not show up on your W-2. Like your car, your home value isn't showing up on your W-2. Your home value isn't necessarily showing up on your tax return. Your car value isn't necessarily showing up on your tax return. So the bank is going to ask for a personal financial statement to keep track of all of the other stuff that you have going on in your life. That statement is going to be personal. It's going to have absolutely everything on there. And fundamentally, there is no reason not to overshare on that statement. Put all of the details on there. Try to summarize if you can, but if you can't and you're not quite sure how to fill that document out, just do your best and give it to a loan officer. They'll begin to ask you questions and move numbers around. That is their job. They speak money. They speak financial statements. All you need to do is provide the information, be honest with them. I like to tell clients, like, feel free to overshare. If I could get something tattooed on my forehead, it'd be the words, "I like too much information." That's a very wordy face tattoo. But if you can begin to give them all of the information, they can help you make sure that you get into the best deal possible. And the same thing is going to go for your business financial statements as well. If you are running a business, or if you don't have a W-2 and you're only self-employed, business financial statements are going to become a critical part of your process. You're going to need an income statement and a balance sheet, and they're going to need to be right. We see bad business financial statements all the time. That's because we're a bookkeeping business and those are our clients when they come to us, and then we make them all pretty. And now suddenly we've got additional documents, additional proof for lenders that not only is this person's personal finances in order, that their house is in order, that they've got a good budget and they're making more money and they're saving money, they've got a positive net worth, they're not underwater, they're paying their debts. But also they run a business exactly the same way, and their business is making money and it's growing, and we're able to do so much with this. And really, a loan wouldn't hinder the business or the personal. A loan would help us be a catalyst really for future growth. All of that stuff you can begin to show on financial statements. It's really important that in addition to the tax returns and the W-2s and all that junk, you also have these financial statements in play, because that's really where you're going to begin to shine and have a lot more wiggle room in your lending ability moving forward. We are covering a lot of information here, but fundamentally, you need great bookkeeping that doesn't take forever, that is designed for real estate, that can help you impress your bankers, your lenders, your tax preparers, your money partners, so that you can scale up indefinitely and really grow your business. And you can do all of this just through honing in your finance department. If this is something you'd like to learn more about, we've got a masterclass that we've put together that you can find the link for down in the description below that teaches you how we do all of that stuff inside of the Landlord CFO system. Go check it out. Number 3 then on our list is understanding your market analysis. So if you have an existing real estate business and it's awesome, and you've been going through these personal financial statements and through the business financial statements potentially, what you know is that pretty quickly, and if you don't know this, you'll learn this right now, or whenever. But what you know is that pretty quickly we start to change what financial ratios we're using as we begin to qualify you for future loans. Like a commercial loan, debt to income is important, but it becomes rapidly less important than a different financial metric that we call the debt service coverage ratio. And this is something that kind of gets hidden in other calculators and financial reports for real estate that you can go see. But that DSCR is going to be really, really important for your business moving forward, because what that does is it says, if we take the person out of the equation, how does that property handle its debt? And this is where you can begin to measure your own risk and begin to really take into account if this were only a loan on this property, how would this loan do? And that's a much different conversation in the lending world than, hey, what if it's this property and my personal bills and my budget and my advertising and marketing? All of that begins to really gum up the works and really begins to kind of dilute your ability to get loans. So what we like to do is we like to effectively help clients figure out what is their debt service coverage ratio, what is their loan to value, their LTV, and what is the experience that they're bringing to the table, and how can we outline these on a third set of documents that basically says we run a tight ship in our rental business. We make a whole bunch of money in our flips and our wholesales or our asset management or our wholesaling or whatever. So like everything is kind of siloed out, and we buy great rental property. So even if, God forbid, the bank had to come and foreclose, they would be foreclosing on a gem of a property. They'd have no problem moving it. But that also means that they probably won't have to foreclose on us because it's such a great deal. That is what we're really looking for. If we can begin to give our lenders the information they normally ask for that makes them feel good, that everybody's used to, and go a little bit above and beyond with personal financial statements and business financial statements showing that not only am I making money, but I know how to keep it as well, and I'm building worth and value in my personal life and in my business. And then we can provide documentation showing this is a great deal. Like, regardless of my experience, this is awesome. Wouldn't you want to fund this if anybody brought it to you? Can we do business together? Now suddenly you're just in a much stronger relationship, and your pre-approval process can be exactly this easy. So as you're going through your pre-approval, you're going to need all these documents put together. But then fundamentally, it's like, even if you don't have a deal lined up right away, bring example deals like this to your conversation as you're going through the pre-approval. Say, listen, if I bought a house for $250,000, but I could rent it out for $3,000 a month, would this be a deal that the bank would be interested in? Like, could we begin to work something out in this space? And just begin to see what they say. Float them deals, kind of soft pitch, so that whenever you do find a deal, you know what the numbers need to be so that the bank will approve you for that loan in a commercial sense. The lending is a fantastic and wonderful world, but at the end of the day, like, your records have to be in place in order to kind of appease underwriting. And so you absolutely cannot just do market analysis. You have to have bookkeeping, accounting, and financial measurements and ratios in place in order to make your business as strong and as powerful and as acquisition heavy as you want it to be. Listen, y'all, let us know in the comments below what you think about this. How can we help you navigate this lending space in your pre-approvals, what kinds of loans you can get, how you can leverage your business? More than happy to help you out here. Bookkeeping is the foundation to your finances. Build up from what you have going on and rule the world and scale up indefinitely. So again, thank you so much, and I will see you in the next video.